that is capital. So here the capital, the amount invested into the business for starting and running the business is called capital. So capital may be in the form of cash, goods or assets. So it means the owner or proprietor who contributes the capital. So here the capital means amount invested into the business, for starting and running the business is called as capital. Now capital may be in the form of cash, goods or assets, whatever it may be. So see, any type of business for starting the business, they need some funds, they need some capital value, so they need some cash value. That cash value, whatever is invested at the time of beginning of the business, is considered as a capital. See, capital may be in the form of goods, cash or assets. So whatever it may be is considered as a capital. Okay, next one, drawings. Cash, goods, assets withdrawn by the owner from the business for his personal purpose or personal use or domestic use is called as drawings. See, sometimes the owner withdrawn some portion of resources from the business, for the purpose of his own usage or for his relatives' usage or for his friends' purpose, all are considered as a drawings. So see, a small example for this drawings are: owner withdrawn cash rupees 5,000 for his son's school fee, so son tuition fee. So suppose suppose if a owner withdrawn 500 rupees from the business related cash for the purpose of paying tuition fee for his son, that amount is considered as a drawings. Here a drawings may not only in the form of cash, even if it is goods or even if it is assets. So in case business related goods, business related assets is used for personal purpose or for his relatives purpose or his for friends purpose, all are considered as a drawings. So that is what drawings. Well, next one, goods. So goods means all articles, commodities and products in which the business deals. Goods means all articles, commodities and products in which the business deals. It means a business which is dealing mainly for the purpose. So mainly whatever the things they are dealing, so such can be considered as a good. So example, see, for a furniture mart, chairs, tables, sofas are considered as a good in the accountancy point of view. Means good in this accountancy means the business, whatever the products are dealing, such products is considered as a good. So actually this is for the purpose of sales. So actually the goods are meant for the purpose of sales. So see, another example, a computer seller, computer store. So a computer store, in the computer store they sell all the computer related accessories. So computer related accessories, so those accessories can be considered as a good. There, see, in this accountancy, goods are classified or not. Goods are classification. So in this accountancy, goods can be considered in different ways. So let us see what are the ways so that goods are considering in this accountancy point of view. So one is opening stock, another one is purchase, so another one is purchase returns, another one sales and sales returns, and closing stock. So these are the ways that goods can be considered in our accountancy point of view. So we won't show directly the good account, but based on the transactions and events we record the account of good as either opening stock or purchase returns or sales returns or closing stock. So in this way we show the good related transactions in our accountancy. Right, now come to the point of what is purchase. So let us learn what is purchase. So purchase, the goods or services which are bought for the purpose of resale or for production of other goods is called purchase. So see, purchase means the goods or services which are bought for the purpose of resale. This is what the major intention. Or for the purpose of production of other goods. Sometimes raw materials are purchased for the purpose of making finished goods. So this type of activity is considered as here the purchase. Next one, sales. The amount of goods sold that are already bought or manufactured by the business is called sales. See, the amount of goods sold that by the so that are already bought or manufactured by the business, so whatever the goods are purchased or whatever the goods are manufactured, and the same products or the same goods or services, whatever it may be, so which is sold to other persons, by the business, this activity can consider as a sales. Right, next one, purchase returns. See, purchase returns, when the goods are returned by the buyer due to certain reasons to the seller is called purchase returns. This can consider from buyer point of view. So it means, see, sometimes whatever the goods we purchased, so there will be chances of damages or lower quality than the required quality, or sometimes maybe there will be leftover stock. So all is considered, all are the reasons for returning goods to the seller. So what the buyer do here, so in case if the goods are not necessary to him, or any stock left after selling some products, or in case there is any damages in the purchased goods, or in case if the quality is not a good one, so then the buyer try to return the goods. So then the buyer tried to return the goods. So such returning activity by the buyer is considered as a purchase returns. Next one, sales returns. When the goods are taken by seller from the buyer on return basis is called sales returns. So this can be considered from seller point of view. So simple. Suppose whatever the goods returned by the buyer, from the buyer point of view, it can be considered as a purchase returns. But from the seller point of view, it can be considered as a sales return. Simple. So seller receiving the goods on return basis from the buyer. So due to the reasons of damages, leftover stock, or any low quality products, so all can be considered as a sales returns. Right. So next one, debit note. When the purchase returns are made by buyer, then he prepares a note with the details of stock or goods returned to seller Such note is called debit note. So see, while returning the goods by the buyer to the seller, along with the goods, he prepares a note. So in that note, he will provide the details regarding the stock whatever he is returning. So name of the stock, number of quantity of the stock, and price of the stock whatever he purchased from the seller. So all the things can be provided in this note. So this note can consider as a debit note. So next one, credit note. So after verification of goods returned by the buyer, seller prepares a note. Such note is called credit note. So once seller receives the purchase returns, from the buyer, based on the purchase note, based on the debit note, he verify the entire goods whatever returned. So here seller will verify whether the returned stock is related to him or not. First of all, he will verify like that, whether the returned stock is relating to him or not. So based on that verification, he will give confirmation note to the buyer. Such note is considered as a credit note. So here, who will give the credit note? Seller will give the credit note. Debit note will be provided by the buyer. So that is what the major differences for debit note and as well as credit note. So actually these two transactions takes place at the time of return of the goods. Well, next one, revenue. The amount received by the business by its regular business operational activities and non-operational activities is called revenue. So see, revenue, the amount received by the business by its regular business operational activities and non-operational activities is called revenue. So let us see what is this operational activities and what is non-operational activities. So revenue means simply to say amount which is received by the business in regular course of business activities and non-operational business activities can consider as a revenue. See what is this operational and what is non-operational activity. Suppose, so see here the operational activity. Sale of computer for rupees 30,000 by computer seller. Sale of computer for rupees 30,000 by computer seller. So computer seller sell the computer and received the amount of rupees 30,000. So this can be considered as operational activity. This can be considered as a operational activity. And let us see what is non-operational activity related. So non-operational activity related. Receiving rent of rupees 5,000 by giving building of a business. So see, suppose the computer seller, for example, suppose this computer shop have own building. So this computer seller used ground floor for his business purpose. Computer seller used ground floor for his computer business purpose, and the remaining first floor and second floor he given to someone for rental purpose. Now if this computer seller receive the rent from the tenant, such amount is considered as non-operational activity. Such amount is considered as a non-operational activity because the computer seller's major business is selling of computers. But he received in another point of view. He received the amount in another point of view because of there will be another source to his business, that is giving building to rent. So whatever the amount he received from tenant in the form of rent is considered as non-operational activity. See even in case Reliance Industries are there. So Reliance Industries have different types of businesses. We know that different types of businesses. So in case if Reliance Industries generated some huge number of profits, so they have lot of liquid cash in their hand. So then they decided to invest in banks as a fixed deposits. In case they decided to invest in bank as a fixed deposits. Now bank will give interest to the Reliance Industry. So the interest whatever they received from the bank deposits, it can be considered as a non-operational activity. So it can be considered as a non-operational activity because it is not their regular business activity. So but they generated the amount by depositing the surplus amount into the bank as a fixed deposit. So through there they receive some amount. They receive their consistent amount. So they receive consistently. So actually they received this amount regularly. So they receive this amount as a regularly. So this can be considered as non-operational activity. Even see, operational activity may be a regular activity, and even non-operational activity sometimes it is a regular activity. So see, because if we given the building to the tenant as a rent, so rent will be paid by the tenant in a regular basis, that is periodically for 1 month. So periodically for monthly based. So then definitely this can also be a regular activity. This can also be a regularly receiving the amount. Well, next one, income. So the amount received by the business through its regular business activity, that is operational activity, so is called income. The example for that, sale of cycles for rupees 15,000 by Hero Cycle. So see, income. So income means amount received by the business through its regular business activity. Is called as income. Example for that one is sale of cycles for rupees 15,000 by Hero Cycles. So actually this is a regular activity for the Hero Cycles. So the amount which is generated through their regular activity can consider as a income. So but in revenue, both operational and as well as non-operational both are included in the revenue, but income is only included, we can say it is included a regular business activity. We can consider it as a regular business activity, right? Next one, come to the point of gain. The excess amount which is received than the actual spent during the economic activity. So see, the excess amount which is received than the actual spent during the economic activity is called gain. So see the example, you can understand easily. If a person bought land for rupees 10,000, so 10 lakhs, after some time same land will be sold for rupees 12 lakhs. So here the excess 2 lakhs can consider as a gain. So excess 2 lakhs is considered as a gain. So it means excess amount which is received than the actual spent during the economic activity is considered as a gain. This can be considered as a gain. Next one, loss. The deficit amount which was received than the actual spent during the economic activity. So the deficit amount which was received than the actual spent during the economic activity is considered as loss. Suppose if a person bought land for rupees 10 lakhs, after some time the same land will be sold for 8 lakhs. So here the deficit amount 2 lakhs can consider as a loss. 2 lakhs can consider as loss, right? Next one, expenditure. Right, next one, expenditure. So expenditure. So here expenditure means the amount spent or payable for the particular purpose, that is purchase of goods, utilization of services or purchase of assets, etc. is called expenditure. So once again, the amount spent or payable for the particular purpose, that is purchase of goods or for utilization of services or purchase of asset, etc. is considered as expenditure. So suppose if I purchase a asset, so that is land, so it can be considered as an expenditure. Suppose I spent amount of rupees 500 for the treatment of my son for his fever purpose. So that can be considered as an expenditure. That also be considered as an expenditure. So similarly, in case now if anybody taking classes from me, so they will provide fees to me, so they will pay fees to me, so it can also be considered as an expenditure. Now, so expenditures are three types. So let us see what are those expenditures. So one is capital expenditure, second one is revenue expenditure, third one is deferred revenue expenditure. So capital expenditure, revenue expenditure and deferred revenue expenditure. So see, let us learn what is capital expenditure first of all. So what is capital expenditure? First of all, a capital expenditure, the expenditure which is spent for purchase of fixed assets or investing in the long term benefits, so is called capital expenditure. So once again, the expenditure which is spent for the purpose of fixed assets or investing in long term benefits, so is considered as capital expenditure. So example for that, see, purchase of machinery, land and buildings, etc. So those can be considered as a capital expenditure. So those can be considered as capital expenditure. Sometimes, so investing in long term benefits also, investing in the long term benefits. Suppose for example I purchased Reliance Industries shares for the purpose of 10 years. So for the period of 10 years, in case if I purchase Reliance Industries shares for the period of 10 years, for holding 10 years period of, for the holding of 10 years, so then it can be considered as a capital expenditure to me. So definitely it can be considered as a capital expenditure, because it is for the purpose of long term benefit. It is for the purpose of long term benefits. So similarly, in case if I buy furniture for my household purpose, so the amount which is spent by me for the purchase of furniture, it will give long term benefit for me and my family members, so that expenditure can consider as a capital expenditure, right? So see, next one, revenue expenditure. Revenue, the expenditure which is spent for day-to-day business activities are called revenue expenditure. Example, payment of wages, purchase of raw materials, etc. So it is recurring expenses. So actually it is recurring one. This capital expenditure is non-recurring one. So non-recurring means, so it is not repeatedly occur. So see, suppose land which is purchased by us or business. So once if they spend the amount for purchase of land, it is not necessary to pay it again. So to pay the same amount to the land seller again and again. So because once if we spend the amount of money for purchase of land, that amount is good enough for providing long term benefit for us. So for this reason, this can be considered as a non-recurring expenses. But come to the point of revenue expenditure, it is in recurring nature. So actually it is in recurring nature. So see examples for that one, payment of wages, purchase of raw materials, payment of salaries, payment of rent, electricity bill, telephone charges, printing and stationery items, all are considered as a revenue related expenditure. So the main purpose of spending revenue expenditure is for purpose of day-to-day business activities, for maintenance of day-to-day business activities. So is considered as a revenue expenditure. Actually the revenue expenditure will expire. So actually this revenue expenditure will expires within 12 months period. So within 12 months period, the amount which is spent for revenue purpose will be expired within 12 months period. So that is what revenue expenditure. But come to the point of here, capital expenditure, it will expire in more than 1 year. So the benefit will be more than 1 year period. So for this reason, this can be considered as a revenue expenditure. So right, next point, deferred revenue expenditure. So next point is deferred revenue expenditure. So see, the amount which is spent in revenue nature, but the amount will be heavy. It will give long term benefit to the business, is considered as a deferred revenue expenditure. The example, large amount of money spent on advertisement, preliminary expenses, etc. See, once again, deferred revenue expenditure, the amount which is spent in revenue nature, but the amount will be heavy, it will give long term benefit to the business is called deferred revenue expenditure. See, I will give small example for this one. Advertisement. So generally advertisement is a regular activity. So for the business, it is a regular activity for the business. Sometimes the business will give huge sometimes the business will spend huge advertisement expenses. So huge advertisement expenses, or they spent lot of amount on advertisements. So because to get a popularity in the society, now actually this is not capital expenditure. Because capital expenditure means will receive something return. We will receive something return in the form of articles or in the form of assets. So in the form of articles or in the form of assets. But if we spend lot of money on advertisement, we should not, our business should not receive anything in return. Anything in the return that is in the form of assets. We should not receive, a business cannot receive anything in return as a asset. So this type of expenditure can consider as a deferred revenue expenditure. So large amount of money which is spent on advertisement is considered as deferred revenue expenditure. So what happens here, in case if this type of expenditure shows in a single period in profit and loss account, in single period as an expense, then this lead to loss. So definitely this will lead to the loss on the business. So for this purpose, so let us see what the business will do for this type of expenditure. So please wait. Right, see how this deferred revenue expenditure can show by the business in their books of accounts, See, so suppose heavy advertisement of rupees 100 crores spent by a big business firm, big business. Now this 100 crore, in case if it is spent on 1st April 2020, so 1st April 2020. Now the period which is spent 100 crores of amount for advertisement is 1/4/2020. So actually the financial year for this date is 2020 to 2021 period. Now a business won't be show this 100 crores as expenditure in single year. Won't be show 100 crores as expenditure, that is revenue expenditure in single year. So the company or the business spread this amount for upcoming few years, maybe to say 5 years. So in the books of accounts, they will show this amount as revenue expenditure and utilize this amount for calculation of the profit or loss of the business in 5 installments. Or more than that. So see, in 2020-21 they may show this expenditure value as 20 crores, and 2021 and 22 period they may show another 20 crores of amount as expense, and 22 to 23 they may show this expenditure as another 20 crores. Similarly 23 to 24 they may show this 20 crores and again 24 to 25 they may show another 20 crores of amount. So in this way they spread this 100 crores into 5 equal installments or any more than that installments also. So that is what we can consider as a deferred revenue expenditure. So this is a deferred revenue expenditure. So if in case if the business show 100 crores in single year as expenditure, definitely this will make impact on profits of the business, make impact on the profits of the business. So as we know that in case if expenses is higher, then the profits will be low. If in case as expenses is lower, then the profits will be higher. So we know that. So if expenses is higher more, then profits will be lesser. So for this reason they spread this amount into different years. So that is what deferred revenue expenditure.